Good morning, Steve in Chicago with the morning grain comments. Well, markets are mixed. You've got beans about unchanged at 10.45 on the March. The March-May spread has worked out to about minus 14 carry, with talk about maybe a little bit slower exports and a little bit slower export demand. Yesterday, the bean exports total shipments today are up 19% versus last year, and USDA's goal is up 8%. Over in the corn, up about a penny at 483. Again, the export inspections yesterday were good, and you've got U.S. corn exports up about 31% versus last year, and the USDA's goal is up 7%. USDA also announced 139,000 tons of new corn sales to Mexico. March-May corn spread right now at minus 10. Again, cash markets domestically need the corn. We're watching pretty closely river logistics and see if we can meet all of the demand for corn. P&W corn is relatively low priced. Argentina right now, corn is probably the lowest price. And we noted that, again, China's not a buyer of corn, not an importer of corn. We go back to all this talk about using GMO seed in China to increase yields and production. We also note that the Brazil futures are at 1 month low due to increased farmer selling. And corn market, again, supported over a long-term rally due to higher demand. Over in the wheat's up about 3 cents near the session highs. Wheat exports right now is about up 25% versus last year, and USDA is calling for an up 20%. You know, it's interesting that this Palestine ceasefire could actually open up the Suez Canal for better shipments and better logistics. We also note that the March-May wheat spread right now is at about 13 cents, which is a little firmer from last week's minus 15. Matif futures yesterday were lower due to the broad sell-off in commodities. And again, when we look at weather, the European situation is too wet, especially in France, while the Ukraine and Russian situation is too dry.